Once you've decided that you're ready to buy your MileageSmart vehicle, you'll have to determine how you'll afford to pay for it. Even after the incentive and maybe even some savings, you may need to take out a loan to purchase the car. There are three major factors that affect your ability to take out a loan at a bank or a credit union. The first is your income and length of employment. The next is your current debt. How much do you currently have in outstanding debt? And finally, your credit report and your FICO score. All of this determines whether or not you will get a loan. How much can you afford to borrow? Many banks and credit unions will allow you to borrow up to 45% of your gross monthly income. If we look at the scenario from our previous budgeting module, the family had a gross monthly income of $5,500. Multiply that by 45% and you have $2,475 available for housing and other debt. In this scenario, the family paid $1,200 in rent, a $100 credit card minimum, and a $50 student loan, which leaves them with $1,125 additional dollars available toward more debt. However, when we worked on their budget, we determined that they really had just shy of $550 available for all car expenses, not just the loan. So even though the dealer tells you that you can afford to pay a certain amount per month for your loan, you want to stick with what your budget tells you is the safe amount so that you're able to pay for all of your other monthly expenses. Your credit score affects your ability to borrow money. Credit scores range from low 300s to 850. In this chart here, you'll see that in the green are excellent and very good scores. This is where you can expect the lowest possible interest rate and the best terms for your loan. When you're down in the red zone, under 600, we're looking at poor credit, where you may have to have a secured loan or a cosigner. You may not get the loan, or if you get the loan, you may have a very high interest rate on that loan. How does that credit score come about? There are 5 major factors to determining your credit score. The 2 most important factors to your credit score are your payment history and your credit utilization. As long as you're paying on time and you're not more than 30 days late, you will be considered to be in good standing with your payments. As long as you don't max out your credit cards and have high balances on your loans, you'll also have good credit utilization. Other factors include how long you've had credit, how often you apply for credit, and the various types of credit that you have. There are 3 major credit bureaus: TransUnion, Equifax, and Experian. They all provide credit scores that are similar and use this model of algorithm to determine what your credit score is going to be. So your credit score affects not just your loan rate, but the amount that you can borrow and the length of your loan. In this scenario, we're going to use 2 examples. One with a person who has an excellent FICO score of 790 or higher, and another scenario where the person has a poor FICO score of around 620. So in this scenario, they're borrowing $12,000 toward their MileageSmart vehicle. They're using the loan for 4 years, and they're getting an interest rate of around 4.25% annual percentage rate. In this scenario, their monthly payment comes to $272.29. The total interest paid is $1,070.07 over those 4 years of borrowing. So the total cost to this person is the $12,000 that they borrowed plus the interest, which comes to $13,070.07. Now let's take a look at the person who has a poor FICO credit score. They're also borrowing $12,000 for their MileageSmart vehicle. In this case, however, they're taking out the loan for 6 years, and their interest rate is 17% annual percentage rate because they're at a greater risk to the lender with their lower FICO score. Their monthly payments, however, come out to very similar to the person who had excellent credit score, $266.95 per month. but the total interest paid for this loan is $7,220.66. So their total cost is $19,220.66. The cost of having poor credit is $6,150.59 more for this person with poor credit. We recommend that you check out our list of area lenders who offer green car loans in the Buying Your Car section of this website. There you will find links to banks and credit unions in Vermont that offer green car loans with lower rates for high miles per gallon cars and hybrid or electric vehicles. There are even lending programs out there for folks who have had difficulty getting a reasonable car loan due to lack of credit or poor credit. To get a free copy of your credit report, you can go to www.annualcreditreport.com. Now we're going to hear from Kip, who's going to tell us about the different types of high mileage vehicles that are out there.